the agentic payment stuff, the AI connection to Bitcoin. There's so many different connections you could make between AI and Bitcoin, but the agentic payment is a fun one. The infrastructure thing is a fun one because Bitcoin miners are now doing in the AI space. Like, what do you see like AI and Bitcoin, the connection there?
I love that question. Have I talked to you about our AI agent that we're using at work? Do you,
No, not at all.
oh, well, we part of our thesis for upcoming demand for the Lightning Network is that Lightning is an obvious money for agents to use. So we didn't just want to theorize about this; we wanted to test it. So I built an AI agent, OpenClaw agent, called Claudia, and each week at BHODL we run a Satoshi giveaway. So the way it works is that the team they put a post out on Friday. They say Free Sats Friday is starting, and you just drop a Lightning invoice into the replies or a QR code, and then we send you 100 Sats. It's just a little fun giveaway to demonstrate the Lightning payments. This obviously takes a lot of time, so we have humans there who are scanning the QR codes or making the payments. So I decided to I set up my agent with an Albi wallet. It's now has its own wallet which we can fund, and I worked on giving it access to Twitter so that it could scrape the Lightning addresses from a post. And we ran a test about a month ago. We got Claudia. We wrote a script, and Claudia was all ready to go. She had a Bitcoin wallet, and she out of all the payments that we made that day, about 30% of them were paid by our autonomous agent. She had a set of instructions. She scraped the addresses from the replies, and she just made the payments one after another. Boom, 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 boom. And that was astonishing. And we didn't tell anyone that we were doing it via agent. So it was we only reveal that after the fact. But for me, it was absolutely mind-blowing. She did 30% of the payments in virtually no time at all. The problems we encountered, she couldn't parse QR code information on the first run, and she also had trouble with Bolt 12 invoices. So there are some technical issues around her payment capabilities. But it's got to a point now where she's fully functional. She has a Bitcoin wallet, and we've also done some work on with the guys at Bitrefill. Have you seen their agent API stack? The Bitrefill team.
I haven't, but like Bitrefill seem like they have a great stuff always for payments. With MicroSeed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because MicroSeed is not selling the washer. MicroSeed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Finally, we have BTC Prague back in 2026. And this year, I'm not only speaking on a panel, but I'm actually going to present an interesting new angle, a perspective, a Bitcoin thesis at BTC Prague this year for the first time ever. I've never done that on any other conference, so this will be a fun one. If you listen to this show on a regular basis, I would love to meet you in Prague this year. It's very high signal, no noise, and Prague is just a freaking amazing city with awesome drinks and a lot of good food. Use code Robin to get 10% off, and if you buy with Bitcoin, you get an additional 5% off your ticket price. I'll see you there in Prague. Make sure to come say hi.
Yeah. So they've built this whole agent API. So we've connected our agent now to that. And we've also demonstrated that you can now get your agent to buy things on Bitrefill simply by putting in instructions. So I communicate with my OpenClaw over Telegram, and we tested it. We said, just buy me a £10 Amazon voucher. You didn't even say using Bitcoin. And then within 40 seconds, it's gone on to Bitrefill, it's located the voucher, and then it drops the voucher code into the chat for you. It's absolutely incredible.
That's fun, man. This is so interesting because we give this, like, if you do that at home, be careful. Don't let your stats be robbed completely by AI. But like, it's so interesting to test it out with some boundaries, with some infrastructure. I tested OpenCore also a lot, and it's just so fun to, you have almost the feeling that there is like a freelancer sitting on the other hand. Like it becomes more and more human like you're giving a freelancer context, because he also does not know about your business. You also don't know about your application, so you're like, here, this is the context, this is what I want you to do, all of those things. And then he just does it, and it's at the level where I'm like, that's shockingly good. And so I'm really excited about what AI and Bitcoin and the agentic payments and the Lightning stuff and all of those things will do to our world in the next 10, 20, 30, 50 years, because it's already so good. It's already at a state where you can use it, and you almost have to use it. Like, I'm at the point where I cannot really do anything else without it anymore. And so the next steps will be crazy good.
That's a great point. You forget that what you see today is the most basic it's going to be from here on out, isn't it? So if your agent is already able to, like, run your diary and write emails for you and do travel research, where's it going to be in 2 years' time? It's astonishing to think of the amount of development that's going to happen.
Will be crazy. One more thing that I want to get into with the treasury company space, I completely forgot about that. How do you look at valuing those companies? I mean, MNAV is, I think, an interesting way to look at treasury companies, but it's such a new class of companies, such a new way of looking at it. And do you think that this will actually long term trickle over to all the companies, as long term every company kind of has to have a Bitcoin strategy? And so MNAV and like Bitcoin gain might even like, or Bitcoin yield might even overtake the earnings per share, or like the earnings per share kind of gets into like, how many Bitcoin did you get more this year?
That's a really interesting question. And in some respects, I'd probably split that into two halves. In some respects, we already have asset holding companies which have businesses as well, and those in many cases are real estate businesses. So you may have a land bank, you may have a large number of commercial rental properties, and a commercial property company, I think, is already a relatively good analogy for this. You have a valuable asset, which is widely viewed as being very valuable, but at the same time, you also have an operating business, which in many cases uses that valuable asset to earn money. And that, I think, is not a bad analogy for what B Hodl is trying to do. Yes, we have this valuable asset, so we will have treasury appreciation over time, but at the same time, our payments services business also uses that valuable asset to make money. And any company which makes money can then be valued on a traditional valuation metric, like a discounted cash flow multiple or an EBITDA multiple valuation. So it may be that we enter a world where you have a hybrid valuation. Personally, I think this is probably where we're going. So you have an element of valuation which is attributed to the asset you hold, to more traditional MNAV, but then you may also have an additional element of valuation which is attributable to the cash flow that your business generates, whether it uses that valuable asset or not. And for many companies, I think that's probably a sensible place to finish. you could already value. I mean, if you think about SmarterWeb's valuation before it had a Bitcoin treasury strategy, they obviously wouldn't have been valued on an MNAV multiple at all. They probably would have been valued on an EBITDA multiple. And over time, and as we're seeing at the moment, most MNAVs are compressing towards one or thereabouts. It's important, particularly in the UK, and this is probably the second point I would make, to reflect that each of these companies in the UK, the listed companies, have to have an operating business anyway. So we are a little bit ahead of the curve because of the laws in the UK. We've already been forced, as it were, to ensure that our operating businesses exist and are viable, and they, I think, will already form a portion of the valuation of these companies. At the moment, I mean, we've got to remember we're very, very early in the development of these kind of companies. Most people in the City of London wouldn't know what MNAV is if you talk to them about it. They would look at the company from a DCF multiple valuation perspective, which is arguably, in my perspective, wrong, because that doesn't have the treasury element in the total valuation. I think it has to eventually be a hybrid valuation where you have an element of valuation that is attributed to the Bitcoin, and then another element that is attributed to the business. And then that gives you an overall share price at the top.
Yeah, it's interesting because MNAV was there before Bitcoin. Like MNAV is not something that the treasury company space made up. So it's an interesting way of like now all of a sudden it's also, I think, in a world where we have money that appreciates over time versus money that depreciates over time, the assets that you have become more important because it's a more important metrics overall, because people know this assets will actually appreciate. I mean, if you look at the balance sheets of the big companies, they have hundreds and tens of billions and hundreds of billions of dollars sitting around, and it's kind of liability. It's obviously good if you have cash laying around as a business, but at some point you're like, oh, that's too much cash. Like that's so much cash. Like the amount of purchasing power that cash pile is losing on a daily basis is just absurd. And so, of course, you don't want to value them based on a melting cube, but a melting ice cube. But what if this huge asset pile, huge money pile is actually appreciating over time? All of a sudden, the asset becomes more valuable, and more people will look at the MNAV and not just the cash flow that they are kind of producing. So it will be really interesting how different equities will be valued in a Bitcoin standard versus a fiat standard, or like in a world where Bitcoin is more dominant. Let's not directly go to the hyper Bitcoinization.
No, you're completely right. And one of the absurdities that we face in the UK is that the messaging from the FCA that we get from the Financial Conduct Authority is that you should be attributing the value of the Bitcoin on your balance sheet at zero. So they are not MNAV at all. They go to the opposite end. They regard Bitcoin as completely worthless. And so if the FCA were valuing a Bitcoin treasury company in the UK, they would look at your 100 Bitcoin, your 1,000 Bitcoin, and they would say the value for that is zero, and the value of the rest of the company is, let's say 12 times EBITDA. So we're in a funny position in the UK.
Yeah, and man, there's this S&P rating that I think Strategy got. I think they talked about that last year in the earnings calls a little bit, and I think they got a B minus. Was it a B minus? I think it was a B minus, which is a B minus sounds better than it is. Like it's not a particular good rating, but it's also not like hugely bad. But like the reason why they got such a bad rating is because they didn't account for any of the Bitcoin. It's just like, yeah, we see you, and we see the debt that you have, we see the prefers that you have, we see the operating business that you have, but those 800,000 Bitcoin, like we really don't care about that. Like this gives 0 points in your credit rating, and I'm like, how? Like I cannot. And credit rating agency that doesn't account for an asset that lays on the balance sheet, which is so huge. It's been around since like 17 years. I cannot take them serious. Like if they don't account for that, I think they are failing at their job.
Yeah, and that really hits the target right in the bullseye. These and it actually goes back to a lot of the things we've already talked about: nation state adoption, the view of TradFi's inability to understand what MicroStrategy are doing. A lot of this is, and the simple valuation of Bitcoin on your balance sheet at 0. A lot of this is an almost a willful blindness. It's an inability to understand that this is a new asset with a new set of properties, and your position of valuing it at 0 is looking increasingly ridiculous over time. No, if in 10 years' time they're still valuing it at 0 when it has 10x from here, I mean, how stupid will they begin to look? And I think the inevitability of history will catch up with these people at some point, but because a lot of them are bureaucratic and slow and have been trained in this system, it takes them a long time to get to terms with that.
Yeah, 100%. And like there's this famous meme, like the two fish, and the one fish is saying like to see how nice the water is today, and the other fish is saying like, what is water? And I think that's kind of like the way TradFi is looking at Bitcoin. And I think it's just a natural. I think this goes back to what we said in the very early stages, that Bitcoin treasury companies, but especially also strategy, just of the scale of it. So that's why it's so like confusing and sometimes painful to watch. It's one of the most misunderstood stocks in human history, because Bitcoiners don't understand it, and TradFi like 100 times worse than the Bitcoiners. And so it's like, yeah, you look at that and like, what the heck is going? Like, how can you don't account for any of the Bitcoin that they have? It's like, if you take like I understand if they say, hey, we account for your Bitcoin, but Bitcoin always has the risk of going down 50%, so we can only account for half of the Bitcoin. Like that's I would be okay with that conclusion. I mean, I would not be okay with that conclusion. I would understand that conclusion. They're like, okay, they looked at it, they studied it, they at least acknowledged it in some way, shape, or form. But just like writing a 0, like, oh, you have 800,000 Bitcoin, you have like $60 billion worth of Bitcoin assets, 0. Like that's ridiculous.
It's completely right. I think there's one or more jurisdictions that are even worse. They require you to effectively over-collateralize what you have on your balance sheet. So if you have Bitcoin on your balance sheet, it actually increases your risk profile, not decreases it. But yeah, I think you're right. I could understand the logic of saying, yeah, okay, every 4 years, Bitcoin undergoes a 50 to 70% drawdown. So let's provision that the Bitcoin drops by that amount, and you can have a cash equivalent value of 50% of whatever your Bitcoin holdings are. I would disagree with that, like you, but at least the logic is clear. At the moment, the valuation at 0 logic makes no sense whatsoever to me. But, we need to be sympathetic to these people. It's hard. This is a hard thing for them to understand.
Wasn't there something repealed last year that required banks, if they hold Bitcoin, to hold the equivalent amount also in cash, the SAP 121 or 122, something like that? I don't remember the exact details. They like required banks to hold the same amount in cash that they hold in Bitcoin, and that's why no bank touched it. Thank you for watching this video. This was only a snippet of the podcast, and if you want to watch the full episode and get all of the context of this episode, you can click right here or here. Oh, maybe also here.